Welcome to the Coin Bureau Weekly News Roundup. My name is Guy.
And my name is Nick, and I'm covering for Jess, who is away from the office. Here are the top stories in crypto this week. Bitcoin finally recovers. BTC rallies after the CPI for April comes in within expectations, and ETF inflows accelerate. How high could Bitcoin go?
ETH ETF Speculation. Crypto analysts debate whether the SEC will approve or deny the spot Ethereum ETFs this Thursday. What does this mean for ETH?
Tether under scrutiny. Ripple's CEO claims the US government will be cracking down on Tether as 1 billion USDT is printed, all while at the same time Kraken considers delisting the stablecoin in the EU. Everything you need to know.
China prints money. The Chinese government reportedly begins buying homes to prevent its housing market from imploding. How could this affect the crypto market?
And a closer look at last week's top-performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC experienced an explosive recovery rally after the CPI numbers for April came in within expectations, and spot Bitcoin ETFs began seeing sizable net inflows again. Notably, the CPI numbers seem to have spurred the ETF inflows, suggesting that spot Bitcoin ETF investors are focused on macro factors. As you can hopefully see, there were actually minimal inflows on the day prior to the CPI print, and even on the day of the print itself. It was only in the days that followed that the spot ETF inflows really started ramping up. This is significant as it suggests we too must pay close attention to matters macro. If you're subscribed to our weekly newsletter, you'll know that we do an analysis of upcoming crypto and macro factors and what impacts they could have on the crypto market. So be sure to subscribe to our weekly newsletter using the link in the description so you don't miss our weekly market forecast. But back to the significance of macro factors. The fact that BTC responded so strongly to the CPI print suggests that any other economic prints will be met with similar levels of volatility and not always to the upside. If the CPI starts coming in above expectations, for example, BTC could experience a sharp correction. Conversely, if the economic condition of the US continues to deteriorate, then this could paradoxically be bullish for BTC and other risk assets. That's simply because it would increase the likelihood that the Fed will decrease interest rates, just like gradually lower CPI prints would. If you watched yesterday's video about a potential recession, you'll know that the worst possible outcome would be stagflation, that is, rising unemployment with high or rising inflation. In these conditions, it would be difficult for central banks to act in a way that would stimulate risk assets. Barring stagflation or any black swans on the crypto or macro fronts, though, it's likely that crypto will continue to grind higher. This is just because the Treasury Department will likely continue to juice the economy leading up to the election, and the Fed will be accommodating so long as inflation stays put. The result could be the 100k BTC target that many traders have been calling for, one that will be within sight if and when BTC breaks above the upper bound of the range it's been trading in on the daily chart since late February. As you can see, this range is somewhere between 61 and 72k. Breaking above 72k would cause a breakout of the bull flag to 100k that traders have been watching on the weekly, a bull flag that many believe is analogous to the one we saw in late 2020 before the crypto market went parabolic. However, it's possible that BTC is in a distribution pattern, signaling a local top. Now, if you want to maximize your gains, whichever way the market goes, then be sure to check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $60,000 on the best crypto exchanges. These deals are for a limited time only and are exclusive to viewers of the Coin Bureau, so take advantage of them while you can using the link in the description. Now, while everyone has been focused on BTC, it seems that ETH is finally starting to make some big moves. This is evident on the daily ETH BTC chart, which suggests that ETH could, keyword could, have hit a local or even a cycle bottom relative to BTC foreshadowing ETH potentially outperforming BTC. Of course, this is due to speculation about the possibility that the SEC could approve the spot Ethereum ETFs this Thursday, its final decision date. As most of you will know, the consensus is that the spot Ethereum ETFs will be rejected, as the SEC is expected to declare ETH a security in upcoming lawsuits. If you watched last week's crypto review, you'll know that this speculation has been brewing ever since the likes of BlackRock and JP Morgan made comments suggesting that the spot Ethereum ETFs could still be approved even if the SEC alleges ETH is a security. Coinbase is now echoing a similar sentiment. In a recent report, Coinbase argued that the markets are, quote, underestimating the possibility of a spot Ethereum ETF approval and that there could be, quote, surprises to the upside as a result. This should come as no surprise if you're a regular viewer. We've been saying this for almost 2 weeks now. Although it is likely that the spot Ethereum ETFs will be rejected, there could still be upside surprises. That's because the crypto market has been very bearish on ETH, evidenced by the aforementioned ETH BTC chart. The ETF rejections, upcoming lawsuits, and security status have arguably been priced in. This means that if any one of these things doesn't happen, then it could result in an upside surprise, particularly when you factor in all traders who are short ETH. For example, maybe the ETFs get rejected, but the lawsuits never come, or vice versa, surprise ETF approval, but lawsuits launched. This just underscores something to always keep in mind, and that's how investors are positioned. The more investors are bearish on an asset, the higher the risk of an upside surprise. This is why bear markets tend to be slow grinds lower with big rallies in between. The short leverage causes short squeezes. On the flip side, bull markets tend to be slow grinds higher with big crashes in between due to all the long leverage being shaken out. Funnily enough, it's hard to identify whether BTC is in a bull or bear market based on this criterion, as it's seen a mix of both over the last few months. In any case, if you're wondering why it's likely that the spot Ethereum ETFs will be rejected, the short answer is that this is what happened with the spot Bitcoin ETFs in the past. The SEC would delay the applications until the final date before rejecting. In that sense, history is repeating so far. If you're wondering why it's possible that the spot Ethereum ETFs could be approved, well, the short answer is that the SEC's enforcement arm is not in charge of approving or rejecting ETFs. This is presumably why BlackRock, JP Morgan, and others remain optimistic despite the SEC's aggressive enforcement arm. As a cherry on top, it's possible that there's political pressure to get the spot Ethereum ETFs approved. For context, many believe that the Democratic Party is inherently anti-crypto, which is understandable given that many of the key players in the crackdown are Democrats, namely, of course, Elizabeth Warren. This has resulted in a sudden surge of Republican support from crypto holders and the crypto industry, which the incumbents, understandably, want to reduce. Convincing Gary Gensler and the gang to approve the spot Ethereum ETFs would be one way of swaying the minds of pro-crypto voters. But then again, it would just prove to everyone that the SEC is political, as many have long suspected. Now, speaking of crypto crackdowns, the US government is reportedly going after Tether, at least according to Ripple CEO Brad Garlinghouse. For reference, Tether is the issuer of USDT, the largest stablecoin, which accounts for the lion's share of trading volume in crypto. We'll come back to that in a second. Now, as Tether CEO Paolo Ardoino and many others have pointed out, it's likely that Brad only said this because Ripple is reportedly in the process of launching a stablecoin of its own. This means that Ripple would stand to gain from additional Tether scrutiny, as would Circle and BlackRock for that matter. Even so, it's objectively true that the US government has been scrutinizing Tether over the last few months. The thing is that the stablecoin issuer seems to have made peace with US regulators, and by made peace, I mean that they're literally working with US agencies to ensure everything is above board. Not only that, but the US government has a vested interest in ensuring that stablecoin issuers become bigger, be they Tether or otherwise. That's because most of the stablecoins in circulation are backed by US government debt. This means that all stablecoin holders are subsidizing US government spending. That's why US officials are probably applauding Tether's $1 billion USDT print, as it means that another $1 billion of US government debt was bought by unsuspecting crypto holders. Oddly enough, these prints are also celebrated by crypto holders, but for completely unrelated reasons. You see, it's believed that the USDT Tether is printing is being used to buy BTC and even other cryptos. If you watched our video about stablecoin market caps, however, you'll know that these huge USDT prints are due to an increase in demand for leverage trading, which tends to spike when crypto prices get volatile. In case you forgot, crypto experienced a massive rally last week. That, my friends, is volatility. This means that there were likely lots of traders who wanted to go long or go short to maximize their profits. In practice, this requires purchasing USDT, as most futures contracts are denominated in USDT. The same is true for the spot market. USDT continues to be the primary trading pair, especially for mid-cap and small-cap altcoins. This is why crypto holders are nervous about the news that Kraken is considering delisting USDT for EU users, something it will probably need to do because of MiCA. To bring you up to speed, MiCA stands for Markets in Crypto Assets, the EU's new crypto regulations. One part of MiCA pertains to stablecoins and states that any USD stablecoins that have more than 200 million euros of trading volume and 1 million transactions per day must be banned by the end of June. In practical terms, this means that basically every US dollar stablecoin will need to be delisted for EU users by the 30th of June. What's odd, though, is that so far most of these EU delistings have centered around USDT. We suspect this is because USDC does not meet the threshold for an EU ban, at least not yet. Regardless, the fact of the matter is that it appears many exchanges will be delisting USDT for EU users by the end of next month. So, if you are based in the EU, we strongly suggest reaching out to the exchanges you use to ask what will happen to all the USDT trading pairs they offer, mainly for alts. If you think this isn't relevant to you, well, consider that almost 20% of all global crypto trading volume takes place in Western Europe alone, according to Chainalysis. To put things into perspective, North America is only first by a small margin, and Europe is bigger if you include Eastern Europe in the mix. What this means is that the USDT delistings could have a profound effect on the crypto market, and I'll reiterate that this effect will likely be felt the most by small-cap altcoins, as most of them only trade against USDT. For what it's worth, DEXs are still a thing, even in the EU, which seems to want to ban DeFi, by the way. Whatever the case, it seems that any bearish crypto catalysts coming out of Europe will be offset by the enormous amount of money printing that's about to come out of Asia, specifically China. For those unaware, China is in the process of deflating a housing bubble that accounted for 20% of its economy. Initially, China responded with minimal stimulus, as it didn't want to cause inflation and also didn't want to risk devaluing the yuan. If you watched our video about China's new central banker, you'll know they brought in a new governor to ensure that the yuan's value didn't fall through the floor. You'll also know that the only way that China would be able to ease would be if the Fed and other central banks started easing first. Given how dovish most other central banks have been, it seems that China has gotten just enough wiggle room to inject some much-needed liquidity into its economy. Naturally, this stimulus is concentrated around the housing market, and it consists of 3 changes: lowering the mortgage rate and lowering the down payment, which makes housing more affordable, and giving $42 billion to provincial authorities to buy up unsold homes to further support prices. Now, this might not sound like much, but it's the biggest bailout that the Chinese government has offered so far, and it's led to speculation that an even bigger bailout will come if this one doesn't work. Seeing that the previous tweaks around the edges were unsuccessful, the chances of further stimulus are very high. So, when you combine this with the likelihood that other central banks will start lowering interest rates, it seems almost guaranteed that China will inject more stimulus as soon as it can. As a not-so-fun fact, it's believed that China is trying to contain its bursting housing debt bubble, as the blast could affect everyone else. This would explain why officials from the US and elsewhere have frequently been visiting China, and could also explain why Xi Jinping himself has been travelling abroad. From the outside looking in, it looks like everyone is trying to keep this inherently unstable financial system from finally falling over. The reality of the situation is ultimately why crypto was created, and in time it will become clear to everyone that crypto is about much more than speculation. In the interim, it will continue to be a sponge that absorbs all the liquidity from the stimulus required to keep the financial system afloat. Now, research by macro analyst Michael Howell suggests that it takes between 6 and 8 weeks for BTC to be affected by changing liquidity conditions. This means that crypto may not feel the effects of China's most recent stimulus until later in the summer. The same is true for the Federal Reserve and the Treasury. Between now and then, it's possible that crypto could see another dip lower due to last month's tax-related liquidity drain, but in the short term, it's clear that the trend is up and to the right, and that is all that matters. Just remember to let the markets tell you where they're going, not the other way around. And with all that said, it's about time we looked at last week's top-performing cryptos. So, take it away, Nick.
Thank you, Guy. Now, last week's top-performing cryptos were Phantom, Chainlink, Bonk, Ondo Finance, and Solana. Starting with Phantom, FTM appears to have pumped on the release of more news related to Sonic, Phantom's upcoming sister chain. Note that we'll be doing an updated Phantom review on the channel later this week, so of course stay tuned for that one. Now, as you can see, FTM appears to be in the process of painting a bull flag on its long-term price charts. If it plays out, FTM could go as high as $2. Either way, it's going to be really interesting to see how FTM performs after the release of this so-called sister chain. And next up, we have Chainlink's Link. Now, this appears to have pumped due to the release of the results of the crypto oracle's recent partnerships with the DTCC, as well as other large TradFi institutions. In contrast to FTM, Link appears to be painting more of a head and shoulders pattern. This could be because Link faces significant resistance around the $20 level. If it can get above that level, though, then it may turn into a bull flag. However, for the time being, it looks like it may struggle to go higher. And when it comes to Bonk, it appears to have pumped due to the meme coins promotion at the recent EDC music festival in Las Vegas. D-Gens and Electra. What a combination. Anyways, similarly to Link, Bonk appears to be painting a head and shoulders pattern, but it's inverse, meaning it's bullish. Believe it or not, though, but it looks like Bonk could pump by another 50% before eventually correcting on the possible head and shoulders pattern it would paint. And as for Ondo Finance, Ondo appears to have pumped due to an update to the Ondo.fi dashboard. Now, this basically lets liquidity providers keep track of the points they've been earning on this innovative RWA protocol. And what it means for price is that it seems to have caused Ondo to break out of the channel it had been forming over the last few weeks. If this breakout continues, Ondo could go as high as $1.30. And last but not least, we have Sol, which appears to have rallied on an upcoming upgrade that seeks to solve Solana's suggestion issues once and for all. Solana's Phantom wallet has also seen an increase in rankings on numerous app stores, which of course suggests more user downloads and users coming to the network. What's spooky, though, is that Sol's long-term price action looks scarily similar to the way it did in the 2021 cycle top. However, when you view it in context of the price action we've seen since then, it looks more like a massive cup and handle pattern that's quite similar to those AI cryptos we've been talking about in the past few weeks. In this case, the target could be about $350. If you want to keep track of which cryptos are pumping and where you can trade them, then be sure to check out the Coin Bureau Telegram channel using that link down in the description.
And that is all for today's Coin Bureau Weekly Crypto Review.
If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too.
Don't forget to check out our deals page where we have massive trading fee discounts and sign-up bonuses of up to $60,000 on some of the best exchanges, only for the viewers of this channel.
Also, if you want to pick up some snazzy crypto merch, the Coin Bureau merch store has you covered.
You can find the link to those resources and many others in the description below.
Thank you so much for watching, and we'll see you in next week's episode.